Hello everyone, welcome back to another video. In today's video, we are going to discuss how we can use the volume spread analysis along with COT high and low. So we'll first discuss we'll not go into the extreme details of or the basics of volume spread analysis. We'll just discuss one or two things. Of course, I have done some videos on that previously, so you can just go ahead and check them if you still have doubts. And then this on the right side is again a simple volume profile chart, and then we'll go into the footprint chart and see what the information that we've gathered from the volume spread analysis, how good is it, how powerful is it, and how we can use it. So what essentially we are doing is trying to use it and combining it with COT high and low. Why we're doing that, I'll just explain in a second. So let's start with what COT high and low is. Again, I've done a video on this, so I'll just take about 2 minutes or so that for people who are new, they get to know what it is exactly. So COT high and low, it stands for commitment of traders. So don't go into the words. What it essentially means is, for example, you have this 5-minute bar. Okay, so within this 5-minute bar, you don't know how the market or the price moved. So let's consider this was the 5-minute period from, let's say this was the 8:30 bar. So from 8:25 to 8:30, what the price did within this bar, we don't know. We just know that it is closed over here at the lows. Okay, so what it could have done is, when it opened, it would have gone like this, made a high, gone like this, and then made a low like this, and by the time it was 8:30, it closed over here. Okay, so this is what it has done. Now what COT low is, the delta from the time it makes a new low, that is this point was the new low, and when the bar closed till the latest or the last traded price, that is this one. So this delta will become the COT low for this particular candle that you see over here, that is about -49, what you see over here. Okay, now let's move on. Let me delete this stuff so that it becomes a little clearer now. Okay, now moving on, what is COT high then? COT high for this bar is from the time it made a new high, that is this one, to the time it closed, that is the delta between these 2 points. So the delta from all the way till this point, that is, this would be the delta from this point, that is, you can call it A to point, or the closing price would be COT high. Okay, now it keeps changing, it is dynamic. Why? Because the highs and the lows keep changing. For example, let's consider at this point the COT low would have been from this point, this was the last low, or the the lowest low of this bar, to this point. So delta between these points at this particular juncture, let's say it was 8:27, the COT low would have been the delta between this. Similarly, COT high would have been the delta from this high to this last traded price over here, and so on. Okay, so let's not confuse ourselves, it is that simple. So why am I using it with volume spread analysis? Is to give an idea of now before we get into that, let's understand what volume spread analysis is all about. I will just again give it in 2 minutes. So it talks about, as the word says, the volume, that is one which is very, very important for us. Above average, average, if you want to read more about in detail in this, you can go and read about it there are books from Tom Williams and Gavin Holmes. Okay, so in short, what it does is, what it talks about is, we will go and look at places where the volumes are high. Okay, and the spread of the bar. So spread of the bar is nothing but this. Okay, you can call it range of the bar, spread of the bar, whatever you want. Okay, and you would ask that how is this, these two simple things, how are they going to let us or help us decipher a lot of things in today's world when there are so many things? Believe you me, it is very, very powerful. We'll just discuss as to how in fact it comes quite close to footprints. If you learn the art of looking at VSA charts closely and deeply, you can go down to 1 minute and you'll get even better levels, but again, it takes a lot of practice, and because 1 minute charts are too noisy, you can call them, or too volatile is the correct word. Okay, so whenever you see, the basic essence is, whenever you see a high volume bar accompanied with a high spread bar, it makes sense because the volume has been, and the bar has moved or closed on top. It makes sense because the there was a lot of volume, and the bar did close on top. Okay, so this is the basic essence which you would have heard a lot of times. But if they were all buyers and the buying was so strong or aggressive, why does the next bar close below this? Okay, so what was actually happening in this up bar? Okay, so this is an up bar, and this is a volume which is higher than the last 10 bars, if you can see. Okay, so what was actually happening here? If you would have just asked yourself this question, if the volume was high and you got into the trade but the next bar closed, so what do you make out of this bar? It essentially means that this point, uh, I'll just take this rectangle tool and draw it here. Okay, so this is a 5-minute bar. I've just drawn this. So essentially this, I know now that there is some sort of selling that has come in here. What type of selling, I don't know, but I know where it can be absorption, it can be sellers, it doesn't matter. I know that there is some sort of selling that has come in here. Now comes the interesting part of using COT high and low. Okay, so as we just discussed, the COT low, that is from the lowest point, this high volume bar, that is 13.48k. Again, it is one of the highest bars of the day, barring aside the opening few bars. And the highest volume of the bar of the day had a huge, not that huge as compared to the previous one when it was breaking out from this range. 291 is the COT low, that is from the low to the close, that is almost till the top of the bar, and even the high, there is no selling. So this clearly indicates to me, firstly, if you compare it with the previous bar, the buying or the buying aggression was not as much, but the spread was. Okay, and so that should raise an alarm bell. That is why we are using COT high and low. So the buying, it looks as if it was there because the volume was more, but if you look closely, the aggression was not that much as compared to the previous bar, that is one. And in spite of no selling, the next bar has closed below. So it means that not only were some orders absorbed at the top, there is also some sort of selling that has come into this place. Okay, now after this, we just analyze these two simple bars and look what it's been doing for the remainder of the session. There is only one bar that is closed above this point and the next bar is immediately closed below. So it doesn't mean that there's going to be selling at this point. It means that this is this can hold on for a little bit of time before it decides what to do. And how can we do that? We'll just discuss and discuss how we can plot these charts. So I hope you've understood why we have got COT high and low into the picture. So in this manner, you can, I mean, mark really good zones. Okay, so the next time when we'll just decipher some of the high volume bars and then go into the I mean above average volume bars and so on, and then maybe if we have time we will move into the 1 minute chart and see what is actually happening, and then finally we will compare whatever we have I mean plotted or deciphered out of the volume spread analysis over here with the simple bar chart, HLC bar chart, along with COT high and low. How does it play with the footprint chart? Okay, so now the next time there is a high volume bar is this one. Okay, so if you see, this is one and this is one. So and during this up move you can see that the volume was going down, although this move was going up. It doesn't mean there is weakness, but when you are looking at this, if you're looking at a 5-minute bar chart, it generally raises some doubts till this point when the volume was decreasing with the price going up, until this point when the volume started going up. And of course this one had a high volume and we had a high COT low as well. Now the interesting part is when we are building a context, so this is the part where it broke out from. Okay, so what I generally like to do is mark these zones. Okay, so this is the point where it broke out from and I saw a good amount of buying come in. So I mark this point. Why? Because I know when the market comes to this point, I am likely to get a sort of resistance, you can support you can call it, but I know I will not call it resistance and support. I know there's a presence of buyers who have taken the market up substantially, not substantially, but I mean almost, if you see, 50 points. So this gives me a good point to enter whenever the market approaches here the next time. Of course this is hindsight as of now, but the market does come here. And now we will discuss. I was just talking this about this because it helps in building the context. Okay, so the next time the bar comes here, it does approach a very high volume bar. It tries to close below and it fails to close below this area. So that is your first clue that you do not enter a short here. The time you want to enter a short is, that is, this breakout has failed, is if this bar would have closed below this. Okay, and the next bar then starts taking a resistance out of this and starts going down. What actually happens is the other way around. If you look at it, it closes above, the next bar tries to take support and go the other way. So this is where you can plot or take a long trade, depending on or having a proper context that this was supposed to be a support or resistance zone. Now the next zone that I would draw is not that one, but like this, okay, not from that zone, because I know that there was some sort of, or rather like this, okay. So because this is the place where the buyers or the sellers did try to come in. If you look at the COT high and low also over here, look at these numbers, they're again one of the highest. As compared to this, the selling was more, so of course there was a liquidation sort of a thing. One was here, if you look at it, and I will talk about this bar as well, but when this happens and the next bar closes, in spite of having a higher COT high than the COT low, this is your trigger point to go long. Then the next target, or whatever your stop loss is, let's say 5 to 6 points, you target 10 points and so on. Okay, now let's come back to this bar, where we see a volume that is higher than the previous two bars and almost higher than, or almost equal to the next two bars. But what catches our attention is this number. Okay, this number is what catches our attention, which we wouldn't have been able to decipher if we had looked only at the VSA chart. But again, what would have caught our attention is a pickup in volume again when it started going down. But what's interesting is the bar doesn't close down. That is one. The second is these numbers are really high as compared to the previous bars, and this bar had one, and this is the next time this bar has. Now I know that when something like this happens, it is you would have heard me call trap traders. Okay, so I know that there are a lot of sellers firstly here and even below. Okay, so there is selling all across this bar. If the bar closes above this, I can easily get my 5 to 10 points whenever the market crosses this point, okay, the high of this bar. So when it eventually does, it takes a sort of you can even again draw a zone like this. So I know it is a little intriguing, or a little intricate rather, I would say, that these zones are difficult to identify. But when you start looking at the VSA charts again and again with practice, you will get these zones quite easily. So what I am looking at is, I know that this bar had a lot of selling in it because of the COT high and low, and I know if it breaks, the high breaks, the 2 attempts or the 3 attempts that have been happening or trying to happen would be taken out, in the sense I would get the move to the other end of the zone, or the zone where I expect some selling. So how do I draw this zone? I know that this is the zone from this bar. I have drawn this zone using this bar and this bar, because again these two bars did indicate some amount, even the bar before that, but this one gave me a clue that there was a lot of attempt to sell, and all these guys who are here trying to sell, having seen this attempt fail and go above their price, will start throwing up, and will go up to this point. So this is a very small scale lookout. So this is a 5-minute chart. Of course we are looking at small levels, so let me delete all these things. Okay, now let me go to one more bar. Again, it is very difficult to focus on each and every bar. You should be building context around not every bar. I am just trying to explain everything so that it becomes clearer on how to look at VSA charts. Okay, you are when you start, the first thing that you do is you look at bars with high volume, number one. Number two, you look at bars with high COT high and low. You can also club it with delta, but I like to keep it simple. Only low and high is what I want to look at. And of course, the VSA, the spread and the volume is always there because of the VSA that we're talking about. Now, let me talk about this bar, okay, the 8.1K, 15K bar. Now, when you start looking at VSA charts, you will suddenly start getting a clue of the volumes that happen, what is above average, what is below average, how is the day playing out. So if you do it for even 2 weeks, you will understand what the general volume is. For example, if you look at, we'll go into the 1 minute chart. Anything between 2 to 3K in a 1 minute chart should grab your attention. Similarly, anything above 8K on a 5 minute chart on Nasdaq 100 should grab your attention, and so on. Okay, so 8K is average or above average. So 10K and 12K is certainly above average, and it should really you should draw your zones around those places. Okay, so let's get back to this part. The COT 8.15 is again average or above average. What catches our attention is this COT low, a high number of -745. Okay, now getting into this bar, if you look again, there is very little buying that has come in from here, this place, if you can consider, but a lot of selling did come in from here. Okay, so this was probably the new high of the day, and it was being made. Now you are generally in confusion whether you should buy or not at this point. But when you see this high a number, okay, it is higher than any of the last 10 bars if you see, and a lot of selling has come in. And as soon as the bar closes above it, of course we didn't have time here because the bar closed and the 5-minute was here, but again it becomes too late. But if you go down to a 1-minute chart, you would see if the bar closes above it, these guys who have stepped in here, these sellers, are going to get trapped, and generally this move will double itself. What do I mean by that? For example, if it is 20 points, you can expect another 20 points at least when the bar closes above it. Okay, and so on, and you can do that. So now let's come into what is happening now. We'll look at the 5-minute chart, and then we'll go into a 1-minute chart if you have time. Let's see what is happening here. So of course we have drawn this zone from this bar. Now let's see if there was any other above average bar or volume bar that was there. One is, again, that we've discussed already, is this one across which we have drawn our zones. The next time it happens is look at these high COT high numbers. It is one is this bar, okay, and the next one is this bar, and the volume is average, you can say, as compared to the previous bars. Okay, so this is the bar that we have to discuss, and this is the bar. Okay, now again the zone is already there. Now this bar closes on top with a COT high number almost equal to one is this one, and in fact higher than the bar that actually made the new high at this time. And what happens after that is a drop below. So now what I do is I generally shift my zone and make it like this. Okay, of course it is the high of the day, but I know as of now I can see some seller step in. So why have I drawn this zone? This is a zone which is neutral. Okay, it means that in this zone I can have something like this. Okay, unless I see something what I just showed you, a high COT low bar. This minus 542 is okay. Let me see. So let me delete this and let's see what we have over here in the next bar. So this is a minus 542. Anything above 700 is good, but the volume is not good. Okay, so this, as of now, when the market is going down, you see the volumes really dropping. So this is not indicative of a bearish trend or a pullback of sorts at the moment. Okay, so the next thing that you see is at this bar, this 542 bar is going to be important to us when the bar, any bar closes above this. Okay, so that is the time. What I can expect is, let's say this is 15 points, I can expect a 15-point move on the upside whenever any bar now closes above this. Okay, that is 1 point. And after this, you see the next bar close below it. So what you want is, essentially, you can go down to a 1-minute chart, a bar close above this, and you will get another 10 points, or the stop loss will be just below this zone. Okay, you can try that out. Okay, and now if you see, the volumes are not that much. How much time is left? About 20 seconds. So even this bar is not going to have that much of a volume. So at this point, you cannot be thinking of going short. Okay, because what happens is, this zone is, although it is a choppy zone, but it is on the longer edge, and the trend is towards the upside. If this was a balanced day, for example, if you had the session something like this, okay, and not like this, you could have played or faded these moves whenever the market reached here and whenever the market reached here, whenever you had a zone like this on a 5-minute or a 1-minute chart. But on this day, when you see the trend is really bullish, and if you see on the volume chart, volume profile chart, there is a low volume node, and even this bar, for example, there is a pickup, a slight pickup. Again, it is average, there is no high volume, and the COT again is minus 383. So what you're seeing in the last 1, 2, 3, 4, 5 bars is, the bars are closing down, and the pressure is really high. But is it really good selling? If you look at it, look at this selling. All the closes are very close to each other. If you look at it, this is the area where all the closes are all the bar closes are associated. So I'll just draw this zone for you. So if you look at this area, this is the zone where all the bars are closing around. Okay, let's see where this one goes. But I'm not inclined towards selling. The first place where I would be inclined towards selling is when I see this high volume bar being taken out, this 10.76, that is the first one. So I will draw a line over here. So on a 5-minute bar, I would like this to be tested or broken down before I can think of going long. If you're talking about scalping, again, you can certainly scalp up and down both ways. For that, you'll have to shift into a 1-minute chart. But on a 5-minute time frame, I'm not looking at anything that makes sense to me. at the moment on the short side, okay? And it's okay to not be in a trade. You just need 2 or 3 in a day to make your day. And look at how the bar is closing every time it's deciding to go down. And look at how the bar is closing. In fact, at this point we've seen some buying also step in, okay? So what we'll see when the bar closes, it's still a long way to go. But when we know for a fact that these closes are together, so anything above this 7600 to 602 and any close above this can really fuel the market above another 10-20 points and give us a move to the upside. Now, why have I drawn these zones is because this market can do this. I mean, after a trend day like this, it can do this for a lot of time and test your patience with giving you no risk, or I mean no good trades or no profitable trades. Rather, it will be a really choppy session. And this is what I'm talking about, a 5-minute session. You can also build the same time frame or the same analysis on a 1-minute chart, and of course for scalping you'll get much better opportunities if you're looking at shorter, I mean 5 to 7 points and so on. So let's do that. Let's shift to a 1-minute time frame and look what we have seen. So on a 1-minute time frame, of course, you will get better clues, and not better clues, but I mean the activity is fast. So what I would generally recommend is, when you're looking at a 1-minute chart, you do that after a lot of practice, because you will be in and out a lot of times and it can really hurt you. Now, if you look at the last few bars, then we'll try and go into a footprint chart because we're running short of time. So if you look, as I said, 2 to 3K is a good number. So you can see these numbers, even if you don't know, you can just go ahead and see 2 and 3K are dark grays. So this is a good number. 1K is and 1.5K is just average or above average. And what has been happening in the past few bars is, I mean, just okay, nothing great. Now, the things that should catch our attention is, again, numbers like minus 350, 360, 400, 500 on a 1-minute bar should catch our attention. Now, look at this bar, okay? So this is the bar which had a lot of COT low, or rather a COT high, negative COT high. So, and the next bar closes above it. Again, there is no selling. And when you're looking at a 1-minute chart, you draw this, okay? Just let me get it. I will draw something like this, okay? Now, why have I drawn this? I know that a lot of sellers have entered into these zones. I will just draw it. This place, this place, this place, even this place, okay? So when the bar closes above this, I can expect a move to 17,600, because these guys are going to get trapped who are trying to sell. Let's see if this closes above it. And so there you go. So we'll just see how it should close above it is our criteria. Again, you will see something like this. That is why it is always better to wait for a confirmation, because this is an area that we've drawn. We know a lot of selling is coming in from this zone. A lot of selling, by that I mean this choppy selling that is going on. It is not actual selling. It is, I mean, this choppy zone where the interest is not there. So what we want essentially is a close above this bar so that we can target or go up to some other point. So let's see what happens. So it will keep doing this. If you see, that is why the close becomes important, and it will keep taking your stop losses and doing the same stuff. That is why I say, when you are in a chop zone that you are like this over here, you have to play it very, very carefully and at the extremes, okay? And another area that you can draw is where you can find support whenever the market approaches is somewhere here, okay? So what you do is, you do not start shorting here. You wait till it breaches and then go short. Similarly, like we just spoke over here, the bar doesn't close, that's not a trigger. We don't go long, okay? So that is what it will keep doing, and it will keep doing till it finally breaks to one side and it catches all the trap traders. Now, last thing that we're going to do is we'll go and shift into a footprint chart so that we can see, and shift back into a 5-minute chart. What is this price? 580. Okay. So we'll just delete these zones and see what was the footprint telling us at that point in time. Okay, so let's see. What we deciphered from COT high and low was there was a lot of buying that was stepping in here, 1 and 2. So these are the 1955 and the 2000 bars, if I'm not wrong. So let's go into the 1955 and 2000 bars. So this is a lot of delta again, you can see. So when you switch on to a footprint chart, now you can see I drew that zone, if you remember, zone somewhere here. Okay, looking at the price when it broke. Look at the footprint charts, what was actually happening here. It stopped at this point because there was a big buy zone here and a big volume cluster over here. It came here and it trapped the sellers who wanted to sell over here, and the market moved up. So we've got it almost, in fact, exactly at the point using just VSA, and we've got those points almost bang on if you look at the footprint charts. So if you want to have even further accuracy, you can just look at this. What I have here is, on the right side I have the delta profile, and on the left side I have the volume. Okay, so it is not the bid and ask. It is on the right side is the delta, and on the left side is the volume profile. So that way I can clearly see where the sellers are associated and where the buyers are associated. Okay, so the market has still not, if we switch to a 1 minute chart, we've still not been able to close above that zone that we marked. Okay, somewhere here 580 or something. We've been closing below it, and if you look at this now, you can see the zone that we drew over here. These are primarily all the sellers. Okay, so you can draw it like this. So these are the sellers. Okay, and what we discussed is, let me delete this. If we have to go short, we go short only if it breaks 565. Otherwise we're going to keep seeing what we just discussed, this, and that is the same thing that is happening. So we have to see a close above this, the area that we drew just a little time back. If you look at this place and you come over here, it is actually essentially a close above this, these buyers that are getting trapped. So when this is taken out, obviously these sellers are going to give way, which will help us take out or reach the 500, the 600 that we were talking about. So hopefully I was able to help you guys understand a little about volume spread analysis along with the COT high and low. Thank you for listening to me. Until next time, thank you. Bye-bye.